Kadeen Mairs, CEO of Dolla Financial Services. Dolla was formed to open doors. Our mission is to make getting the money you need a quick and easy process. When life comes at you fast, you can count on us in your time of need. We provide financial services for those with a vision and those on a mission. No matter if it's a business loan or personal loan, small or medium, once you want to grow, we lend. Over the past 7 years, Dolla has played a vital role in the microfinance market, disbursing more than $3 billion in loans to more than 5,000 Jamaicans. We will continue to play our part in the growth and development of Jamaica and the Caribbean by providing financing support to all entrepreneurs. Whether it's a short-term loan until your next payday or a long-term business loan, visit us at Dolla Financial Services. Remember, we lend.
Good morning and welcome to the Dolla Financial Services Q3 2022 earnings call. I'm Jermaine from Learn Grow Invest and I'll be your moderator today. I'll just hand over now to Kadeen Mairs, the CEO of Dolla Financial Services.
Thanks a lot, Jermaine. Good morning, everyone, and welcome to our quarterly earnings call for quarter 3 of 2022. Before we begin, I'd just like to say a small word of prayer before we get into the discussions. Dear Lord in heaven, as we partake in this proceeding, we ask that you bless the words that we are about to spread. May it be in your name, dear Lord. Thank you for another day. Thank you for health. Thank you for strength. May this call be of blessings upon others, as well as may Dolla Financial continue, to make a positive impact on the lives of not only our customers, but our investors and our nation at large. Amen. All right. Thanks again, Jermaine. So welcome to our earnings call. This is pretty much something that is not practiced, I'd say, amongst a lot of listed entities. But at Dolla Financial, we found it very important that for each quarter, we have a public discussion, on our financial statements, as it's important to, get our financial statements out. As noticed, we have about 45 days after the quarter to get out our financials. We typically get out our financials to the market, within 20 days. So we kind of take pride in that. Additionally, putting out the financials is one, but it's also important for us to have a call where we can interact with investors, shareholders, analysts, and the general public at large, interact in terms of, the company performance, the financial statements, in good times and bad times, basically highlight the successes during the prosperous times and of course, calm any fears during adverse ones. So on the call today, I have my CFO, Trevene McKenzie. So Trevene will be going through the financial statements, as we can see by the agenda, and then we'll just look at the company outlook, and then we'll allow some questions and answers as well. So for today, I guess I'd just like to speak, just mainly on highlights, just before we get into the numbers by Trevene. For the quarter, basically, the main highlight for the quarter is that our loan portfolio was up quarter over quarter by 125 billion, 125%, which is like $1.1 billion, as well as our profitability was up year to date at 201 million. So before I get too deep into the numbers, I'll just allow Trevene to just come in and just walk us through the financial statements, the unaudited financial statements that were submitted to the stock exchange.
Thanks, Kadeen, and good morning, everyone on the call. So let's just jump right into the numbers. The group recorded a total income year to date of 475 million, which represents an overall increase of 170% over September 2021. Our net interest income also moved upward to 436 million and by 213% year on year. The movement in net interest income, of course, is directly attributable to the stellar performance of the sales team and the more or less maintenance of interest expense. Moving into our operating expenses, the group saw a 93% increase year over year with OPEX standing at 241 million, and we will discuss that later on in a short while. And through all of the above, net profit before tax rose to 201 million, increasing by 257% year over year. The loan portfolio once more grew to 1.17 billion and total assets followed suit to 1.36 billion. Cash and cash equivalents increased to 106 million and total debt stood at 532%. Now, our strong results this quarter reflect the resilience of the group in the dynamic operating environment, and we perform quite well when compared to our competitors in terms of credit, which is still healthy and with non-performing loans remaining relatively low at 8.7%. Our ECL stood at 6.1%, and we have a nice low efficiency ratio at 51%. So let's move into more detail. Now, in terms of our assets, the two areas of focus were, of course, cash and loans. You'll notice our cash balance has increased by 354% up to 106 million. And this is mainly due to the company's mandate to, one, maintain a minimum cash balance, as well as we did receive a bridge loan from our parent company, First Rock Private Equity, for working capital support during this quarter, or the previous quarter. When compared to last year, the company in September 2021 would have geared up to do the IPO and would have had immense demand due to the increasing knowledge of the company's services, as well as opening new branches, including Guyana. So that would have, contributed to the cash balance in 2021 versus the current balance in 2022. The demand was quite high last year, and we were in the process of seeking more funding at that time. Nor loans net of ECL saw a significant movement to 1.2 billion, increasing by just about 125%. And this is as a result of the hard work of the sales team, as mentioned before, taking advantage of the demand coupled with the manageable increase in the ECL, which offsets the balance. Now, loans payable saw an increase to 432 million, or just about 46% year over year. And since we have not yet acquired the Jermaine loan in 2021, which was approximately $1 million, you will see where in 2021 it was 296 million, jumped to 432 million this year. And as I said, directly attributable to the Jermaine loan, which we would have acquired in Q4 of 2021. Now, the company also received a bridge loan from the parent company, First Rock Private Equity, in the amount of 100 million. This increased short-term borrowing by just about 100%. Now, to conclude on equity, it's pretty clear on the year-on-year increase of 624%. The company successfully completed its IPO in June of this year and listed on the Jamaica Stock Exchange, which saw a $400 million increase in additional paid-in capital. And of course, the retained earnings jumped by a whopping 2,322% to 253 million due to the year-on-year earnings of both the company and its subsidiary Dolla Guyana Inc., who has seen year-to-date profits of 22 million Guyanese. Now let's move on to the much anticipated earnings. Dolla recorded total net profit before tax of 201 million on income of 475 million, which was up 235% year on year. Now, our expenses moved up to 241 million, primarily driven by the investments to support our growth strategy. Now, these investments include the recruitment of talent, costs related to the IPO, and of course, the impact of the ECL. Now, the company's adherence to the IFRS 9 methodology of expected credit losses requires that we recognize a provision even if the accounts are still performing. And Dolla is mindful that the increase in the loan book, that with the increase in the loan book, there is an inevitable increase in the ECL, as the ECL is a percentage of the overall loan portfolio. And what this means is that where, let's say, the ECL stays at 5% or 6%, with the growth in the portfolio, inevitably we would be recognizing more expected credit losses as we go along. But the good thing about this reality is that with the increase in the loan book, there's a corresponding increase in the income, which offsets the net profit line. Our earnings per share for the quarter, as you may have seen from the financials, were 4 cents, and 7 cents for the 9 months ending 2022. Now, you'll notice a large decrease in the number. However, this is solely due to the increase in shares during the year to facilitate the IPO process. And just to put this into more context, we would have commenced the year with approximately 27 million shares, and you'll see this on the financials. And now the company has 2.5 billion shares with a weighted average of just around 1.5 billion as at September 2022. So this isn't unusual at all with these activities. Now let's move on to our cash flows. Now, the group saw an overall movement of 354% year over year in terms of our cash flows. And of course, in growing the business, the company will be utilizing cash rather than generating in order to build the loan book and to achieve those revenues that you're seeing here today. And as mentioned before in previous forums, cash is Dolla's inventory, as it is with other financial markets. And you'll notice that the use of cash goes solely towards the core function of the business if you take a keen look at the cash flow statement. Now, cash flows from financing, however, remains positive, as we would have, received first of the funds from the IPO, as well as more recently the short-term loan from First Rock Private Equity. Now, as we wrap up the financial segment, let's talk ratios. Now, the group's efficiency ratio remains low and steady over both periods as we continue to maintain low costs and build income. And you'll notice in comparison with other players, our efficiency ratio is really one of the lowest. Another great metric of profitability is the net profit before tax margin, standing at 42%. And what this tells us is that 42% of the company's income turns into profits, which is quite good and has been maintained year over year. The company's debt to capital ratio moved from 91% to 43%. And of course, this has reduced due to the additional capital raise in June. This metric also explains the company's ability to take on more debt financing, as financial companies tend to do in their operating models. And lastly, we look at the much anticipated NPLs. Now, we have seen an increase in NPLs year over year by just about 0.8% and quarter over quarter by 2%. And we do believe that this is marginal. Now, there are a couple sizable loans which experienced some delinquency as at September 2022. However, all efforts have been made to regularize these accounts, and we should see improvement as at the end of Q4. Now, the company continues to operate at a very high standard regarding delinquency, and the industry standard is currently 10%, and we aim to keep it well below that, as we have been doing over the past few years. At this time, I'll now hand over to Kadeen for the outlook and closing remarks.
Being, I have to say, well presented. Before I get into the outlook, I'd just like to say, it's very important here at Dolla, that we continue to build out the team. If you really zoom in at the numbers compared to last year, you will notice that our staff costs has increased significantly. And the main reason for that is that we have been building out the team. we have been incentivizing, the current team for their performance. We have increased, our staff complement. We have built out our executive team. We have Trevene on board now. She started earlier this year. That she has been a significant asset to the company. And, in terms of producing these financial statements and high quality financial statements as well. We've also hired a chief strategy officer who will be assisting me as I get the mandates from the board, to expand regionally. So our strategy officer is also there. That's Devita. So Devita is definitely there helping us with strategy and expansion and any business plans that we have in place. We also have our COO, Kenerai Carr, as well. It's very important to note that we at Dolla, we have very low staff turnover. I'd say we have 0% amongst execs and senior managers. We have, incentivized our entire team with employee share offering programs. So each staff has a share in the company. And this really reaps results for us in the performance as everybody recognizes their single effort and what it does for the team on a whole. So just wanted to highlight that before I go into the outlook. So thanks again, Trevene. A very important, milestone for us was crossing the $1 billion mark in the bond. We did an upsize, and we managed to raise over $1 billion. We're still reconciling, exactly where we are. But we have made plans so far in terms of how we will be managing this debt to ensure that we can service the debt and we can get this money out on the road working prudently. So for that $1 billion, one of the main things that we plan to do is we plan to continue to grow the loan portfolio of Guyana. We plan to inject about 100 million down in Guyana. We're looking at expanding Guyana location, open a new location in Berbice in Guyana. We're also looking at a new subsidiary called Ultra. And what we see from Ultra is that we want to tap into another segment of the market. So the team and management on board is currently looking at that business model, and shortly, we will announce, the final decisions there and who the key operator of that day-to-day operations will be. We're thinking about allocating around 350 million towards, growing that business. In terms of organic growth, definitely we will be continuing to grow organically. The more money that we have is the more money that we need to get out there working. Money in the bank account doesn't earn for us, and getting money out there is one thing, but getting it out there prudently is very important, as we take pride in our ECL, as Trevene mentioned, and our non-performing loans. We want to keep that as low as possible. So what we'll be doing is opening new branches as well, so that we create a bigger network that we can distribute from. We're looking at a location in Trelawny currently. I think we've finalized a lease arrangement. So I think that will be announced shortly, as well as we have also been looking at a location in Mapen, which might take a little bit of branch build out. Not big capex or anything. Normally our spaces are about 800 square foot just to host, admin, sales, and a manager. Everything is centralized at Dolla, so all costs go back to head office. So we shouldn't see much cost increase in terms of branch build out there. So those are some of our plans, now that we've raised some capital. Additionally, we are still eyeing some acquisitions, and what we've decided to do, or the board and management, along with the direction and guidance of the board of directors, is to reserve some funding from the bond raise for potential acquisition or acquisitions that may come up over the next 3 to 5 months. So that's also, one of the plans that we have for the company. In terms of regional expansions, we have been speaking on regional expansions over and over again. What I can say there is that we have engaged professional services in 3 main Caribbean countries. We've engaged professional services, specifically legal professional services, for some legal guidance in terms of regulatory framework in three countries, particularly St. Lucia, Barbados, and Bahamas. These territories we see as low-hanging fruits. We're familiar with these countries, two of which are CARICOM countries, which creates a lower barrier to entry for us being a member of CARICOM. We've made trips to Bahamas as well, to feel what the landscape is like, get our ear closer to the ground, see what the culture is like, what the people is like, what the competition is like. So we have been, from a strategy standpoint, continuously exploring places to grow Dolla Financial outside of Jamaica, which will create significant shareholder benefits, over the medium term. In terms of, we have 1 quarter left to basically double down our efforts. So definitely the team, will be putting out some promotions leading up to the Christmas period, so that we can end the year, have a spectacular year end, to say the least. We have come a long way as a company, as the financials can clearly show. We have a very young, very aggressive team, a team that believes in the company, which will see this team continuing to build this company over the next decade or more. We spoke on the branches, we spoke on the build out, and those are the main outlooks that we can look for, over the next quarter and entering into the new year 2023. So at this time, I guess we will allow, I think this is my favorite part of the segment, and one of the main reasons for the earnings call as well is for the interaction, the question and answers. So I will allow Jermaine to just come in at this point so that he can facilitate the question and answer. And Jermaine, I'd like to say, thanks for allowing us to use your platform, so that we can use Learn, Grow, Invest. You've been doing an excellent job in terms of educating the general public on investment, and we thought that this would have been the best platform for us to have our quarterly earnings call. And I'd like to see other companies as well do their earnings calls, because it's very important to not only talk about the financials, but just generally educate people on what to look for in the financial statements, what's happening within a company, and how this can affect performance. We will celebrate not only the successes, but we'll also count fears, as I said before, in the inverse. So just like to thank you for the platform, Jermaine.
You're very welcome, Kadeen, and it's great to see companies take us up on our offer to be here. So it's definitely mutual in terms of that appreciation. We believe that the more information investors have, the better decision. Thank you for this partnership as well. So let's take some questions from our community members. So would have in the chat as well. So I'll ask my user.
I think you're breaking up. I'm not sure if it's me or Trevene. Are you?
I'm experiencing the same, yes.
Oh yeah.
Is that better?
At the moment it is. Let's just keep going and
yeah.
Right. So so Philip is saying congratulations on an excellent quarter. So for clarity, the growth in the loan book up to quarter ending September does not include any funds from the bond?
Correct. The bond was closed on the 18th of this month. So we would not have had access to that money being raised during that period. So the benefits of the bond have not been realized as yet, which definitely the third quarter will show some results of having capital to grow the business.
Okay, great. Next question here from Philip again. When do you expect to receive your license from the BOJ?
So what BOJ has given to us is a no objection letter that basically states that they have no objection with us continuing as a microfinance institution. And what they've done is basically ask us for some time, as they had a lot of applications. Obviously they would have prioritized, the listed companies, given the impact that it might have on the market, etc. But we should, I'm expecting that we should get that money lending license. If not by the end of this month, I'd say by sometime in November. So I think it's just a matter of time, and we're just being patient with them, as it's also a new thing for them. It's a new license being offered. So it's a learning process for everybody. In terms of information on Ultra, it's very simple. What Ultra is, it's a premium loan product that offers um, capital or loans to persons of high net worth that have, it's asset-based lending. So it will be fully secured loans, but higher size loans. So loan sizes that we normally would not consider as a microfinance company. So you're talking about loan sizes. A person can, to make it simple, a person can come with a property, their personal property is valued 100 million and they want $20 million to borrow. That's the kind of concept. Or they might have luxury items that they would want to use as collateral for loans. So it's just a different market. It's a product that or a business model that is done, in North America and Europe, that we've been studying for the last probably 4 to 5 years. So we're finally at the point now where we've tested it, and we've decided that it's something that we want to introduce to the market.
Okay. All right. Next question should be up shortly. From Limitless Podcast, do you think you will still be able to? Well, I don't think I'm seeing that.
Yeah,
Well,
by
yeah,
end of the year.
yeah.
Yeah, so very, very, very good question. I'd say it's one thing to lend out the money, but to do it prudently is the biggest challenge. We could always lend out the 1.5 billion because people always want money to borrow. But what we have to do is be very prudent with the lending. So we do have strategies to ensure that we at least unlend half of that money raised within the next 2 months. I mean, it's really 2 months that we have left, 2.5 months, and have enough capital to start the new year so that we can see a even significant performance in Q1 for 2023. So definitely over the next 6 months, we'll definitely see some uptrend in the loan book, uptrend in interest, fee income, and definitely, having the capital allows us to explore other strategic moves in the market.
All right, great. Next question. Being an investor in Dolla Financial, are there any special packages on loans?
Well, actually, I think we're going to be announcing some special, some loan specials. So this person is an investor, so I hope they become a customer as well. Of course, Dollar has a lot of products that are tailored to your every needs. We have the MediPay, we have, green energy loans, we have different products. So they can always visit our website and find out which product really fits whatever need that they have currently.
Okay. Next question. How do you see the growth and performance in Guyana going forward?
I think, to be frank and candid, I think that we won't have enough money to to meet the demand for loans in Guyana. And these loans aren't consumer loans. These loans are business loans. People who want bridge financing, who want factoring, who are providing services to the oil and gas industry, who want to expand their businesses to meet the needs of this industry, and also to expand in other industries within Guyana based on the significant, I mean, they're the fastest growing economy in the world, and that brings a lot of opportunity for us. So right now we are just doing the best we can to manage the demand, manage our delinquency, and just continue to grow the loan book. As we said before, we're planning to open a location in Berbice, so we're contemplating that currently, and we definitely see the loan book and profitability continuing to trend up in Guyana.
All right, next question. How do you balance the challenges with cash flow for on lending and then waiting and wanting to reserve funds for potential acquisitions?
All right, so basically, I mean, Trevene spoke on it before, but liquidity risk is very important to us. it's always important to have, a cash balance in reserve for any unforeseen circumstances that might come up. It's also very important for us to, if we are viewing potential acquisitions, to have cash reserve so that we can take on these opportunities. So in terms of balancing the cash flow, as I said before, we've already budgeted, where money will be allocated for each opportunity, whether it is for organic growth through our branches, whether it is to send 100 million to Guyana to grow the loan book there, whether it is to put 300 million towards Ultra. So in terms of balancing, I think it's just simply planning, which we have done.
Yes, and just to add some context to that, Devon, in the planning, we would have determined how much we would need for potential acquisitions versus how much as a business we would plan to on-lend. And what we do is to ensure we separate the cash itself to ensure that there is no commingling. And with the on-lending, of course, what we would do is if we're planning to lend, let's say 200 million, just for an example, we ensure that the collections is also coming in, and that would further fund on lending. So we do separate the two to ensure that there's proper planning and disbursement of the funds.
Okay, great. Next question: how do you manage risk in this current environment? Well, I guess you were speaking a little bit about that already, but anything else?
I guess they're speaking on the environment of increasing interest rates, yes. Speculations of a recession. And my answer to that remains the same. We've survived COVID as a company, and I think that COVID is one of the worst things that could have happened. I've never heard of a recession causing planes to not fly anymore and for people to stay in the houses and the country entirely shut down. And, you can't even see your grandparents. So I think we have learned a lot from COVID, and a lot of the strategies that we have within Dolla it was implemented for the same purpose of, us weathering any catastrophic event, whether it is financially or economically or otherwise. So I think we're in a good position. If you look at our secured loan portfolio, it continues to increase. So it's always good for worst case to have recourse to be able to liquidate assets in the event that there's a recession so that you can get cash flow and all of that. So we have put plans in place to mitigate, any economic risk that might come up.
Okay. All right. Limitless Podcast is asking, would you guys consider becoming an approved MFI with the DBJ?
Yeah, I think we are in the process of becoming an approved microfinance institution with DBJ. It has its benefits, but as you can see, everything that has its benefits also has its restrictions as well. But we're definitely currently actually exploring being an approved MFI. I think within the next 2 to 3 months we'll definitely be MFI with DBJ.
Okay, great. Next question is, what percentage of the bond would be on-lent?
All of the bond money will be on-lent. The purpose, our core business is to actually on-lend money. So all of that money will be on-lent to the market. If we even do an acquisition, what you have to realize is that we're buying a company that has a loan book already. So all the money that we get from this bond will go towards income earning activities. So if we raise $1 billion, $1.5 billion, we should see within 6 months our loan portfolio doubling in size and the earnings coming from that.
Okay, great. Next question: can you break? I think this one is for Trevene. Break down the factors that led to an increase in NPL?
So really, with the factors that led to the increase in the NPL, as I mentioned in the presentation, we had a couple significant loans that went into a non-performing state. And that is pretty much what it is. It's not a widespread issue. It's just based on specific loans that went into a non-performing state. And what management is doing is really actively managing those. We have seen improvement coming out of September 30th already, and we do plan to wind that down going into December 31st.
Yeah, just to add to that, so non-performing loans is really defined as loans that pass 90 days. So if we have a loan with a significant balance or two or three loans and it hits 90 days, even if the person is making payments, we still have to classify it as non-performing. However, if you look at the estimated credit loss, the ECL, you'll realize that the ECL has remained, I'd say, frozen or just about the same as it was the last quarter, because the ECL now takes into consideration a lot of other things in terms of making a provision. And the ECL is what really affects the P&L and the bottom line. So the ECL will determine how much provision to make for a loan. So a person might have a loan with us that is overly collateralized by a motor vehicle, and they weren't able to make payments, or is making small payments, but the loan goes up to 90 days. So you will have to make a 90-day provision, but an ECL provision might not have to be made because you've actually collateralized that loan, and there's a greater risk of collecting on that loan. So it's just balancing both NPL as well as the ECL. But the key thing with the ECL is that that's the one that we watch, because that is the one that actually can reduce your profitability and the P&L.
Okay. All right, next question. Is there a target NPL range?
Definitely single digit. Our aim is always to stay within the single digits when it comes to non-performing loans and ECL. I mean, industry standard for microfinance, which is a high risk business, is about 15%. That's industry standard. We don't hold ourselves to that standard. Internally, we always try to stay single digits.
Okay. All right, next question. With the aggressive nature of Dolla Financial, will we see any acquisition anytime soon?
We're always looking for opportunities, and our shareholders will be the first to know. As soon as we tie down any certain acquisitions. But discussions are always been had, for potential acquisition. Always comes down to the price and the benefit that it will bring to Dolla and its shareholders. So we won't be doing an acquisition just to say we do an acquisition. Has to be a good buy.
Okay. All right, next question. Will this recording be available after? I can take this one. Yes, it will be available here on the Learn Grow Invest YouTube channel. It will also be accessible through the Dolla Financial Services Investor Relations webpage. All right. I think we got those questions already. Okay. Philip is asking, will you take stocks as collateral with Ultra?
Looks like we need to give Philip a job, because we definitely will be. There's a big demand for that, and we see where there's a lot of liquidity issues, with institutions, and they can be a lot stricter in terms of the stock that they will take. So a product is needed, to give margin facilities and assist the market. Everybody knows we charge higher interest rates, because we like to see bigger profits as shareholders. So at the same time, if you borrow against your stock, it definitely won't be at a bank rate. But it does create, an ease of access, which is of most importance in our business. So definitely we'll be looking to take stocks as collateral at Ultra.
Okay, great. Next question. How important is the stock price to Dolla Financial?
Well, your stock price is, each person owns a stock. So how important your stock price is how it is important to you, I would say. Personally, where the stock price is or how the stock price behaves, we're actually very impressed because it shows stability and steady growth. It's always good to see stocks that, it's not erratic in movement and shows and can be very reactive to what the results of a company are, whether good or bad. And we definitely see that with Dolla, where, each time our performance increases, our stock price increases. So we're definitely looking to continue to perform, to give returns, and be able to provide, dividends to our shareholders, and continue to grow the value of their stock. So that's what we're here for, and we do that through providing us a service through Dolla and running a business model that continues to be profitable.
And just to add to that as well, I mean, with the stock price where it is, it really shows the confidence that the market has in Dollar. And Dollar really takes that into account in terms of how we operate and our performance, because we want to ensure that we live up to the standard of our investors. So we do ensure that we take a look at it. It's very important to us.
Okay. All right, next question. All right, Christopher is asking, what would be any other strategic moves that you may explore to utilize these additional funds?
I think the main strategic moves are, if we're going to generalize them, organic growth. So we will have more salespeople, more branches. So what that does is increase monthly disbursements in loans. So that's one strategy. Another strategy is when we look at new products or subsidiaries that focus on a whole different market, which is what we're focusing on Ultra. Diversification, we look at other territories outside of Jamaica to diversify our risk. Economies that are growing, that's where Guyana comes in as well. And then we also explore, other opportunities to have a presence in markets that we are not. And that's where we look at like St. Lucia, Barbados, and Bahamas. Bahamas will give us hard currency return. So that will be beneficial when it comes to FX risk.
Okay. All right, next question. Do you expect projects to be easier to execute once your microfinance license is secured?
Well, I mean, having a microfinance license does not prevent you from making an acquisition. So if that information is being shared, that is misinformation. Once you have a no objection from the BOJ and they say that you can continue to operate, then you can continue to operate. That shouldn't be a challenge in terms of doing acquisitions.
Okay. What's your plans on gaining more market share from Access Finance, and others to grow faster?
Investment in Guyana is going good. Probably Trevene can talk on the year-to-date profitability. But I think last quarter we were at about 19 million or somewhere thereabout. Continue to grow the loan book. It's always good to take it slow when you're in a new territory. That's what we've been doing. Learning the market as we go along. And as I mentioned, looking to open a new branch in Berbice. That's another region of Guyana. In terms of market share, I think persons can just look at other companies and see if their earnings are increasing or decreasing, their loan books are increasing or decreasing, and that will tell if a market share is going somewhere else. So I think that one can be explained on its own. I won't particularly speak on a competitor, but definitely we see markets outside of the market that we are operating in, which we continue to grow. As I said to Jermaine earlier, it's just a matter of having the capital to unlend. The demand is there for our products, and people love the quality of service that we give.
Yes, and just to add to that in terms of Guyana, so their loan book is currently at 190 million Guyanese, and for their first year of operations, that is pretty excellent performance. They are currently looking at 67 million Guyanese in terms of income to date, and they are also looking at 22 million in terms of net profit. So Guyana has been doing pretty well for the first year, and we expect to see this trajectory continue into the future.
Great. Chipmunk Financials, early days yet, but when can we expect a dividend?
That will be disclosed to the JC once the board has approved. But I'd say that for me, Dollar is one of those stocks that you want to hold on to. And you buy a stock for two purposes: to see the value of the share increase, as well as the potential dividend payout that you can get. So that's important to us for you to note. But I can't say when as yet, but I'd say that based on the performance and our retained earnings, you can say that there's a possibility that this can be made.
Okay. Any timeline for the Trelawney location opening?
So we've signed a lease arrangement. It's in the heart of Trelawney. I think it's just a matter of time for us to announce it. So I'd say Mario Brown, who's our country manager, he leads these strategic moves. So Mario will make that announcement as soon as everything is up and running. He likes to cut a ribbon, so and bless the location. So as soon as he does that, I'm sure it will be on social media.
Great. All right. Any plans to open any more locations here or overseas? I guess outside of the ones you've already spoken about.
No, we were specific in terms of the ones locally, and we definitely spoke of more locations in Guyana and exploring other territories.
Okay. All right. What is Ultra? Random World is asking.
It's an asset-based lender, in short, that provides loan to high net worth individuals.
Okay. All right. So how many locations will you have in total over the next 12 months?
That's a good question. I can speak in the short term, Maypen and Trelawney. We definitely will continue to explore more branches when the opportunities come up. But as I say, it's very important to continue to raise capital, because once we unlend this $1 billion and the loan book increases, we'll be relying on cash inflow to continue to grow the loan book. So if the current locations are able to continue to grow the business, then we'll stick to that new location. However, if we continue to raise capital, which we will always do, then we'll continue to open new branches and see how best we can continue to grow the business.
Okay. I believe that was our final question. So should there be any other questions, if you're watching the replay, for example, feel free to leave them in the comments below, and we'll maybe wait at the end of a week or a month and just forward them to the Dollar team. I'm sure we'll have Kadeen and his team again join us in the future, as we've now created a standard for these earnings calls. Mm-hmm. So I want to thank the Dollar team. Thank you for joining us here. We had over 200 persons, I believe, join us. So that is excellent to see. And yes, let's meet. Aline is asking, what about a Mandeville location?
We do have a location in Mandeville. I think we opened that about over a year now, probably 2 years now. It's in the same plaza across from the hospital where the Island Grill is, Midtown Mall.
Yeah.
Okay. All right. So thank you for that. Any final comments or thoughts you want to leave with your potential and existing investors?
Go again for me, Jermaine.
Any final thoughts or comments?
Oh, no. As I said before, these quarterly earning calls will be something that we'll be having each time that we release our quarterly financial statements. Trevene will be here to go through the financial statements in details. I'll be here to speak on the strategy. Jermaine will be here providing the Learn, Grow, Invest platform. And we'll speak on the highlights. We'll speak both on the good and the bad and keep our investors in the know at all times.
Great. All right. Thank you so much. All right. I hope everyone enjoyed the rest of their day. Thank you so much for watching.
Thanks for having us.
Bye-bye.
Bye. Kadeen Mairs, CEO of Dolla Financial Services. Dolla was formed to open doors. Our mission is to make getting the money you need a quick and easy process. When life comes at you fast, you can count on us in your time of need. We provide financial services for those with a vision and those on a mission. No matter if it's a business loan or personal loan, small or medium, once you want to grow, we lend. Over the past 7 years, Dolla has played a vital role in the microfinance market, disbursing more than $3 billion in loans to more than 5,000 Jamaicans. We will continue to play our part in the growth and development of Jamaica and the Caribbean by providing financing support to all entrepreneurs.
Whether it's a short-term loan until your next payday or a long-term business loan, visit us at Dolla Financial Services. Remember, we lend,